The House is set to vote on the tax package today. Talking about big packages, that deal has already passed the Senate. The legislation would extend Bush-era income tax cuts for 2 years. That $858 billion package would also prevent a spike in taxes on capital gains and dividends. It would renew long-term unemployment insurance and provide new tax relief for students, working families, and businesses.
Joining us now from the Russell Rotunda, Republican Senator Chuck Grassley, Senate Finance Committee ranking member, and your friend Judge Gregg is here too. Senator Grassley, good morning. It's good to see you.
Good morning, Judge.
Okay, I think I can hear you at this point. So, what about the House? I mean, by all accounts, this is going to pass both houses, and it will become law before the end of the year, right, Senator?
Absolutely, and I'm quite surprised by the wide margin it passed the United States Senate. And I think it'll be a closer margin in the House of Representatives. But I think everybody's coming to the realization that during a recession, you shouldn't increase taxes on anybody. And also, I think, for the most part, we'd be better off if we could extend these present tax policy for a permanent period of time. And also, because this is talked so much by people that don't understand why we're doing this, everybody says, well, should we cut taxes on other people? Well, the point isn't we're going to cut taxes on anybody. We aren't going to raise taxes on anybody. And if we did nothing, we would raise taxes on everybody. And what we're trying to do is keep the existing tax policy where it's been the last 10 years for at least another 2 years, which is obviously better than the biggest tax increase in the history of the country, and better, but not quite as good as if we could extend it permanently.
You know, you've been in Washington long enough, Senator. Respond to this. We don't need to run our credit card through China to borrow more money to give a gift to a billionaire. I mean, that's the rhetoric that you hear. And you can, obviously there was, according to the New York Times, there was fury. There was actual fury over these cuts for borrowing money from China to gift it to billionaires, which is a strange way of looking at keeping the status quo on money earned by people that's paid to the government, isn't it? But that's what you're dealing with.
Well, of course, see, your question implies that we go to China on our hands and knees and beg for them to buy. What we do is we go into the world marketplace and offer our debt for people to invest in. Like 50% of it is invested by Americans, maybe 10% by Chinese. But Chinese make a determination that the United States is a good investment. So the bottom line of it is that we are not doing anything whatsoever to say that we ought to borrow from China. What we're talking about is having the tax policy of the last 10 years continue for another 2 years. Now, over the last 10 years, you didn't hear people complain about we ought to raise taxes on anybody. So why now?
Chuck, I want to talk about another issue here. You know, a lot of our friends on the other side of the aisle are very upset about the death tax proposal in this bill. Now, I've never understood why when you go out and get hit by a truck, you should pay the government 55% of the money that you've earned over your lifetime and take it away from your kids and maybe the people whose small business you're trying to run. But maybe you could talk a little bit about what the death tax proposal is in this bill, because I think it's an important element of what's happening here.
Well, you're absolutely right, Senator Gregg. This is a $5 million exemption with a stepped-up basis with a 35% tax rate, as opposed to if we did nothing, we'd go back to $1 million exemption and a 55% tax rate. And the feeling of it is that particularly for small business and for agriculture, because of the inflation of real estate values, that it would be very destructive to passing on family farms and small businesses from one generation to another if you only had $1 million exemption and a 55% tax rate. And another factor here is that death should not be an incident of taxation, not just for a philosophical reason, but for a practical reason. If you have a willing buyer or willing seller determine the price of something, the government's going to get a lot more money than if you have a fireside sale when somebody dies and you're forced to sell something. And that's what would happen if you only had $1 million exemption.
Senator, it's Andrew Sorkin here. You know, there was a practical argument made by the Republicans to extend the Bush tax cuts for the next 2 years. But what's the argument going to be in 2012 when there has to be a recognition that at some point we have to raise revenues and we have to have lower costs? We have the other senator here at the table who's been trying to deal with the deficit. And how is this argument going to work? Because all of a sudden we went from a practical argument, which is we're in a recession, we need to do this now, and now it seems to be flipping back to the philosophical argument, which it seems to always be. And I don't say that from a political perspective. I just say that's what's happening here.
Well, I think you can call it a philosophical argument. I would call it a historical argument, that for about 50 years, regardless of what the high or low marginal tax rates might be, the taxpayers of this country have decided that they're going to give the federal government about 18% of gross national product for us to spend and leave the other 82% for you to spend. And so that 50-year average speaks about where we ought to be, because we have not had a revolt against taxation, and that level of taxation has not hurt our economy. So I think if we keep the present level of taxation even into the future beyond the 2 years, then of course that's even going to bring in more revenue, because the Congressional Budget Office says it's going to grow to 18.7% of gross national product. So nobody has to argue that you have to increase tax rates to bring in more revenue, because the present tax rates, according to CBO, will grow as a part of the gross national product for Congress to spend. And we've seen that happen before.
Senator, I got to ask you, the Washington Post, it just very clearly said any extension of the corn ethanol provision shouldn't be part of this this tax deal. In fact, they say the government pays the industry for the privilege of selling to a captive market, and this is one place where we should start cutting. Now, we know where you're from, we know where Senator Conrad is from, but if we're all going to share in some of this pain, can you really make a logical case that that this should be part of the bill, the continuation of ethanol subsidy?
Yeah, of course I can, from several angles. First of all, it's only one of 51 tax incentives in this bill. And for instance, the research and development tax credit's been in this bill for 30 years and is being extended. Nobody would argue that we ought to be dependent upon importing innovation from other countries into the United States. We should innovate ourselves, create jobs ourselves. And so the same way when it comes to biofuels, we should not be dependent upon dictators in Venezuela or the oil sheiks and OPEC of the Middle East. We should be energy independent. And secondly, the energy policy of the United States for the last 30 years has been to make use of as much domestic production of petroleum as we can, don't import, have alternative energies of wind, solar, biomass, geothermal, biofuels, you name all of them. And we should be dependent, we shouldn't be dependent on foreign sources of energy, and so all of the above. And then we should also have conservation, a three-legged stool of energy, and biofuels is part of that, but biofuels is only a small part of the total alternative energy.
Well, Charles, as you know, we've disagreed on this a little bit over the years, and it's been a pleasure to debate you on the topic, but I have to say we've weighted a little too heavily towards some of the biofuels to the detriment of those of us in parts of the country that would like to be able to buy energy at a reasonable price. For example, why do we still have a 45% tariff coming in from Brazil on their biofuels? I mean, they're in our hemisphere. They're a country we like. They're a country that we wouldn't mind having as a friend. Shouldn't we be buying their biofuels?
There's two answers to your question. Number one is, if you don't have, taxpayers would be subsidizing the production of ethanol in Brazil, and I don't think we want to do that. The second thing is, there can be ethanol come into this country duty-free right now, up to 7% of our production, and they're only using 1 percentage point of those 7 percentage points that can come in duty-free through the Caribbean Basin Initiative. And if you want to get more ethanol in from Brazil, bring it in under that loophole, and it's perfectly satisfactory to me and anybody else in the business.
You see, Chuck has outlasted me in this debate. We've been going at it for 18 years. He just plain outlasts me on the debate. There's no way, two ways about it.
But the most important thing here is, you asked why the people in New Hampshire should be maybe having an economic incentive for a biofuel. Why should the people in Iowa pay taxes and give an economic incentive to, we'll say, Caterpillar to have research and development? We're talking about the government directing tax incentives so we're less dependent upon things coming in from the other countries to get our trade imbalance down.
We should run this all on maple syrup, which isn't subsidized at all.
You know,
that's the answer.
Yeah.
Do you know that you can use maple syrup?
Senator Grassley, thanks for your time this morning. We appreciate it.
Okay.